All right, so what's the deal with the Nasdaq? In fact, what's the deal with US stocks? Now, for those of you that have been following my work, especially in Telegram and just technical analysis, aka macrovise coming soon, you would know that I was raving on about short the Nasdaq. We're humans, right? I still believe the Nasdaq is a great short opportunity. However, in recent developments, and because the Nasdaq has, of course, made new highs or significant new highs, that we must consider a bullish scenario here, and I'm talking about a longer term bullish scenario. And the reason why I say this is because I'm still bullish on the Dow Jones, I'm still bullish on the S&P 500. I'm only bearish on the Russell 2000. So this puts a lot of things into perspective when we're talking about the US equity market. The Nasdaq has been rising, and it's been rising, I'm not going to say pretty rapidly, but it's printing, or it's the characteristics of this rise is leading towards an impulse wave. And the impulse wave we're referring to is an Elliott wave impulse wave, because Elliott wave impulse waves provide characteristics. Let's go on the weekly. Now, an important factor here is that impulse waves, of course, have their own, you can say they have their own variables, right? We know for a fact that this is a 5-wave sequence. We know US stock markets are in primary bull markets. Yep. And because of this, we know that stocks are due to rise in a big way. Okay, so we can make a case for stocks to continue rising here because of the price action of the Nasdaq, the price action of the Dow Jones, and the price action of the S&P 500 also. All we kind of need to do is look longer term. We don't necessarily have to look at volume, but we know the current sequence of trend is definitely a 5-way sequence. Now, initially I was bearish because of what was happening here, because we were in the final 5-way sequence. However, what I did not point out is the relationship between wave 1 and the relationship between wave 5 in terms of price and time, right? So what I didn't point out is that usually the relationship of wave 1 is related to wave 5 in terms of equality. So quite simply, because of course the chart is logarithmic, it doesn't make sense to use such calculation here. So what we would have to do is we would have to use Fibonacci to project where wave 5 could end. Now, the average difference is around the 618 fib. So we need to expect a more healthier rise on this pair to occur here if we are going to use the perspective of what's happened in previous years. So this means that there is still a good chance that the Nasdaq could rise and the Nasdaq may not even crash. Considering that this may happen, then we need to look for retracement. Let's go into the daily time frame, right? Because the only way we're going to even see this from a better perspective is to go onto the daily. Now, we did have the crash in 2020 where we saw this vicious decline in prices, and then price did bottom out and it has made a new high. Right? Perfect. Now, that's on the daily time frame. But if you go into the 4-hour time frame, I do believe we have some sort of 5-wave sequence going on here. And preferably, my count is towards a 5-wave impulse. Last week, we did see prices decline. And however, I do believe this sequence is printing a 5-wave sequence. So this begs the question. If we don't see price reverse next week, then we definitely do have something else formulating here. However, my bias is that we will see price reverse and we will see the final reminiscence of the Nasdaq hit around maybe 10,300 before we see a nice sell-off towards 85, 70. This is my perspective on the Nasdaq. Remember, this is only a bullish scenario here. Anything could happen in the market, but we're going off the basis that the market is in corrective mode, and the market is also in an impulsive phase also. So we're in the final stages. This is what we're looking at. So providing this does happen, guys, we may look for retracements. It's also important to remember the 100-year chart on the Dow Jones Industrial Average. I think a lot of people, some who do understand the wave principles, some who don't actually understand how bull markets and bear markets work, that the 100-year chart of the Dow Jones Industrial Average, when we're referring to the 1929 to 1932 crash, which spanned over 3 years, was when the low was printed at 41, around 40.4 actually, and we started this massive bull sequence. We've had plenty of other crashes during this time. One, I guess you could say, in 1937. We've had some in, I guess, 1972, and we've had some in 1981, 1982, and we've had plenty of crashes during these times. Of course, the bull market has continued to manifest itself. Key factor here is that every bull market does have characteristics that it does abide to, right? When we're using the Elliott wave, we first want to see a break of structure. That's the most key factor. Unless we see a break of structure, we can never really be bearish. Of course, you can make assumptions, and a trading is not really a guessing game, but you're just assuming at the end of the day, when you make an investment, you're banking that the investment wins, right? So looking at this 100-year chart, we haven't really met any key Fibonacci targets yet. The one I'm primarily looking at for the Dow Jones Industrial Average is the 0618. This is why I still believe we can get Dow 40K. Providing that the sequence is incomplete, this means that the likes of the Nasdaq and the S&P 500 still have some room to go. If we take this off the weekly, and we of course take Q here, right? So the likes of the Dow Jones still has some room. Now, I'm not expecting a straight drop here on the Dow Jones. That's not what I'm expecting. In fact, I'm expecting some sort of consolidation pattern to happen here, and maybe a triangle, maybe another zigzag, or maybe we'll see a flat. However, this 618 is definitely our reference point before we can see a bounce in price and a sharp rise. So this is what we're looking at here. There is definitely a great opportunity formulating here on the Dow Jones, the US Nasdaq, and the S&P 500. Now, a lot of wave analysts, they'll be like, they won't count their waves, they'll rush into counting their waves, right? Without actually understanding that each impulse wave must contain 5 waves, each corrective wave must contain 3 waves, and a trend is never over until it's over, especially when you abide by these characteristics, right? I've been studying the wave theory for a long time, but I've been studying the wave theory shorter than a lot of the professionals, and I managed to get more of my forecasts correct in comparison to their forecasts. So this is my viewpoint on the US stock market. Other stock markets, different scenarios. A majority of other stock markets are already in bear markets. However, bear markets don't just move straight down in a straight line. They do have form. So there will be an ebb and flow. Markets move up, down, not, straight up and straight down, right? So putting this into perspective, guys, and remembering this, the upside potential for US stocks are still highly great. Unless we see a break of this channel, then yes, guys, we can expect some sort of scenario in regards to the massive crash we're looking for occur here. We don't know this yet. We remain bullish. So we can also remain bullish on the US Nasdaq. However, is there another drop for stocks coming? I believe so. So this is what we're waiting for, guys. That's all for this video. I hope it was helpful. I haven't done many of these videos in recently, but I will try to form or push out more. Of course, I'm doing the bi-weekly forecast for you guys, so I will try and push out more when I can. I hope this video was helpful. This video and US stocks can also help you in the forex market, especially primarily looking at the dollar index. When stocks drop, the dollar usually rises. When the dollar rises, stocks usually drop. That's a key hint for you guys. That's all for now, guys. Take care, and I'll see you on the next video.